Good morning, what's up? How we doing? Let's get to it. Market open in 3 seconds. Here we go. Best time of the day, baby. Let's see what we get. We're here for market open here today. Get used to it moving forward because this is how we love it. Big dogs. Not too much volatility off the rip. Usually this will settle out. The market will pick a direction and go. By the way, this isn't worth taking a trade on, but I'll tell you what, more often than not, the first move of the day will fail, and then it'll pull back and either reverse sideways range in the opening range or pull back and then continue in the direction of the initial move. But how often do you really see it happen where that first move of the day just continues basically until the afternoon? Almost never. Usually if you do see that, there's a huge bar off the rip. Like if we got a massive outsized bull body right now that closed huge, we got continuation on bar 2 and bar 3, and then range sideways, then it wouldn't surprise me to see bars, 10 onward, just continue higher, but that's pretty rare. This also, by the way, is even more dramatic off the Asia Open. You'll a lot of times see that first move fail like almost every day. Not worth trading on unless you have a setup because the timing is the issue. But a lot of times on that Asia Open, it'll take 1 or 2 bars in a particular direction and then fade back into a trading range. I'm sure a lot of you guys have seen that before. So we'll see if the bears end up fading us back downside here, down toward 29K. What's up? How we doing? Sunny Rays, Big Dog Roy. How we doing? Ryan, Derek. My guys, let's get to it. So as is typical, I will let the first 2 bars of the day here do their thing. See what's going on, see how they end up closing up. We'll hang out here for the next few minutes. And then it's time to get to work, man. You guys know I'm willing to trade. Well, I mean, if you really made me, of course I could take a trade on bar 1. But I typically like to wait until at least minimum the close of 2, just to let volatility come in, get some context here on the day. But bar 1 and 2 have got to be clean for me to take a trade on the close of 2. More often than not, my first trade might be on the close of 3 if they're clean. If the first 3 bars of the day do not give me any kind of clean setup, of course, at least they've served their purpose in providing context. Okay, so we've got a lot to watch. All right, now range so far here on the opening bar, we're looking at just under 90 points. It's not too bad. We can do that. We can work with 90 off the rip. Minute 50 out here till 1 closes up, rolls over into 2, pressing into the 29 ones. Bouncing away from 29,000 off the rip. Wouldn't surprise me at all, by the way, if later into the day we end up testing 29K. But honestly, best case scenario would be if we could just stay away from 29K all day and spend most of the day here in the low, maybe up to the mid 29s. You guys doing well? How's your morning going? All right, minute 15 out. All right. Nice big bull body here off the rip, though, I gotta say. That is not too bad to see out of bar number 1. Now, we'll see if bar 2 can maintain that move. Zoom out here and get a better look at the full overnight session. So, there we go. Pressing into the highs. Now, we had basically an equal-sized bull body back there in pre-market. All right, there's the rollover bar one. Bar one of the day is in the books. On to bar two. You see how the bulls cleaned that up? And ended up closing that bar. It was looking sloppy there on bar one for a little while. The bulls ended up cleaning that up. Closing it very clean, actually. Relatively impressed there by the bulls. All right, we are less than 5 minutes out from go time here for me. Lotus, good morning. Come on, bulls. They're getting knocked down immediately. Well, bulls making a little bit of headway here. Now, bar one was, of course, the opening bar of the day. It's going to be relatively sizable most days. It's over 100 points, over 110 points in range, actually, there on bar one. I like the way two is developing here so far, but it's still a little bit... I don't know, it's a little small. You know, I'd like to see it grow a little bit, even if it means getting above a single ATR, because what do we know, by the way? Those of you Ram guys in the tomb, what do we know about our first, well, I'll say 10 bars, but it starts to fade as you get in the back 5 of the first 10 bars of any trading day. I don't know, like a 5-minute, we'll say. The ATR, well, this is also true, by the way, on a 2-minute, any time frame, but we're talking about a 5 right now because this is a 5-minute NQ chart. Since my ATR, the average true range number, that says 37.43, since that's averaging the last 10 together, well, it's going to be artificially low to a lesser and lesser degree with each passing bar, but it's artificially low for the first 10 bars of the day because it's averaging in pre-market bars, right? So it's really not a true after New York session open ATR until, I suppose, the 10th bar closes. But of course, once you get through like 4, 5, 6 bars, it starts to get more toward normal, you know, because you're getting more of a sample size after the open. But look, I don't trip about it too much. I just, you know, I'll say, okay, it's artificially low on the ATR, so I'm cool if bar 2 wants to grow a hair, give me a nice clean close. It's got to be really clean if I'm going to take a trade on the close of 2, but we're 50 seconds out. See if these bulls can pop this guy up, clean us up a bit. It's not like the range is out of control on bar 2. You know, we're looking at maybe 40 points. That's fine. It's not 400. Oh, you bulls, you bunch of babies. All right, so absolutely nothing on 2. You see how 2 faded back, wicked higher? Bulls got rejected pretty hard. Faded back, closed as kind of a small bare body inside, of course, the body of bar 1. So I'm watching 3. So like we just talked about, this first move, again, bar 1, a lot of times it can struggle to hold. And had bar 2 closed as a nice, moderate at least, sized bull body, if not larger, it gives you a bit more confidence. But bar 3's trying. Bulls keep getting knocked down as we approach those mid-29 ones. See if we can make a meaningful move on this attempt. Gonna have to swallow up that wick of bar 2 for me to care. We got 320 out to do so. That's plenty of time for the Bulls to get the job done. All right, I'll tell you what, Bulls. If they can swallow up that wick high at 2, I'm a tad interested, for sure. But it better be fucking better be clean, my man. SR, how we doing? Big Trev, what's up? All right, range on bar 3. Growing here. Got a minute 20 out until the third 5-minute bar of the day. Here on this NQ chart closes up. Now again, the average range of bars is going to be artificially low because we're only 3 bars into the day. I'm averaging 10 together, that red number bottom right of the chart on your screen. So it's artificially low, so I'm not worried about it if the range of the bar exceeds the ATR in these first like 7-ish bars. You start getting into bar 8, 9, 10, you're only averaging in 1, 2, or 3 pre-market bars into that average now. Does that make sense? So I consider it less and less as the day, goes on, as the morning goes on, I should say. But here we go, 30 seconds. All right, baby. All right, 8 seconds out. Stop limit buy goes out. Let's see. Can we close nice and clean? Oh, baby. Bring that down a little. And I am filled. Beautiful. Adjust my stop here just a hair. There we go. All right, man. Beauty. Let's see if these bulls can get the job done here. So what's up with you guys? You have a good weekend? I know some of you guys, be honest, how many of you were on the floor by Saturday evening tripping because you hadn't hit a hotkey in, what, I guess about 24 hours? Maybe 30 hours? It's all right. There's nothing you can do. What copy trader do you use? I use the affordable indicators. I think it's called the accounts dashboard. I don't know. It's treated me well. I've tested a bunch of copy traders. I had problems, big problems with basically all of them. This one has given me the least problems, which is tremendous. But, you know, no copier is going to be perfect. But this one's been pretty damn good. I've been using this one for probably over a year now. And I've never really had a catastrophic issue. All right, I got my risk manager right below the wick low, bar 3. Let's see if these bulls can step in, get this job done here. Now again, is the close of 3 like some A+ setup? No, of course not. Of course not. You got 1, 2, 3. I'd rate probably a B+. Probably a B+. But I put on B+, man. Alright, bulls. That's about enough. Step on in! Take us up. I want to see 29-3, baby. Mario Big Dog, what's up, brother? How are we? All right, we got a minute 22 out until bar 4 rolls over into bar 5. Bar 4 trying to swallow up bar 3. Of course, my risk is managed right below the wick low of bar 3. It's right where I need it. Good to hear it, Mario, my man. All right, Bears, you want my stop? You're gonna have to earn that shit. You're gonna have to take out that wick low of 3 if you want mine. But what a press, I will say, out of the Bears. All right, cut it, move on. Man, that's an ugly sequence, 2, 3, 4. All right, keep it pushing here. Let's see, bar 4. We're just getting started, dude. Bar 4 into 5. Bar 4, probably nothing here. We'll roll over onto 5. Bar 4 is actually going to close beneath the wick low of 3. Now I look at this and I wonder, are we going to start off Midas Monday with just the ugliest trading range you've ever seen in your life? Let's hope not. Let's hope not. If we get a nice big bull bounce here, I'm going to be pissed! Not because I got stopped, but because that's going to mean trading range. And trading ranges to start off on Monday, not into it. Not especially a single bar sideways trading range. So ATR is starting to creep up, of course. The range on these first few bars kind of been all over the place. Just over 110 on bar 1, mid 40s, 60, high 70s. It's reasonable. I tell you what, I think right now just about best case scenario would be if the bears could take us deeper. Maybe take out the wick low of 1, and then if we could honestly keep going. I don't want to see a test of 29,000. But if we got it, we got it. Okay, we got 3 minutes here. Bar number 5. Coming right into the 20 EMA. Yeah, so what? I'm not too concerned about the 20. I'm much more so looking at the wick low of bar 1 and 29K, that round number. Now, it's not an S tier level, you know, but it is a tier 1 level. There's the break through the 20 EMA. Quick break, 25, 30 points downside into an instant test of the wick low of 1. Bull's going to try to step in and bounce it here. We'll see if they can, you know, hold him off. Now, I gotta tell you, until I get more proof, I look at this and I start thinking, it's early, but trading range? Fuck, I hope not. Man, I hope not. We don't want a trading range. It'd be about 150 point wide, maybe 200 point wide trading range, which is, you know, that's fine. But ATR is probably gonna creep up into the 60s. Probably the 60s as we get more after New York Open bars. And you start getting into the 60s, maybe even 70s on the ATR, which is the average range of a 5-minute bar here in points. With a 150, 200 point wide channel, it's like, I don't know, especially early in the day, it can start getting kind of tight. Right, so we'll see here. Now, what I will tell you is, it's certainly a low probability trade to buy this test and risk the wick low of 1. But if you want to bet on the trading range, it's not the craziest thing ever, though I wouldn't say it's particularly a ram trade. But that's all right. If you want to take a trade that, you know, can make mathematical sense, you know, be my guest. But you understand it's low probability, which means, you know, you're not going to win most of them. But when you do, it'll be a very good reward to risk. But if you're someone who gets really pissed when you lose, little tip, don't take low probability trades. We got within a 1.5. 6 ticks of testing the wick low of 1, and the bulls held him off. It's not too bad. All right. Bar 5 rolling over. Let's see what 6 brings. Yeah, so most of the time, by the way, this is going to take out the wick low of bar 1. Okay, most of the time it will. You gotta understand that. So again, can you take it? Can you get long right now and just risk the wick low of 1 and then just see? Of course you could, but you're going to get stopped out on most of those trades. That's okay, by the way. But again, if you're someone who doesn't do well with a high percentage of losers with really big reward to risk to make up for it when you win, psychologically that fucks a lot of traders up. So there you go. They just took out the wick low of 1. So what did we just talk about? So we'll see how bar 6 closes up here. So another thing here. When the bears, in this example, when the bears take out the wick low of 1, which was that low a day, now you're kind of in limbo. And what some traders will do when you get that bounce, they'll get long and risk the new wick low because we now took out the wick low of 1, right? So it's like, okay, if the bears took out the wick low of 1, if we are going to see a trading range, then we'll probably get a bounce here and you can use that wick low. The one wild card here is 29,000. You see that, which we're currently testing right now. Okay, now buying right here, I think is really hard. It's fucking really tough because how do you manage risk? It's very tough to manage risk. I prefer to use price action based stops and then just let that equation of expected probability or estimated probability and reward to risk come together. Whether it's a higher reward to risk, lower probability trade, somewhere in the middle, or a higher probability trade, lower or even negative reward to risk trade, just let it come together. But if I can't use a price action based stop based typically on after the New York session open price action, I'm not gonna hit it. Nine times out of 10. So bar 6 is just continuously trying to take out its own wick low. So this would be the first bar closing beneath the wick low of 1. Okay, so you guys see what we're looking at here now, right? The big question is, does this, you got 4, 5, 6, and it's like, okay, it's kind of a sizable bar, but it's like, all right. The big question here becomes, are we going to see a big bear trend? That's the first bar to close beneath the wick low of 1. That is very much an early trade. Okay, but is it a crazy trade? I don't think it's a crazy trade, but you are betting against the trading range. But I will tell you what, the trading range hasn't really developed yet. Okay, so what that is an early trade. Of course, you still have the wild card of 29,000, which we just tested here on bar number 6. So we'll see how bar 6 closes up here. You see that? We're getting sucked right back up to 29K. For me, it's worth one more bar here. That'll close up. I'll watch bar 7. Just to get a bit of a higher probability that we are done with 29K if I am going to get short. So you'll see they'll take out the wick low of bar 6 here on new bar 7. And we'll see if the bears, after they take out that wick low, which they've now done already, can actually continue this guy lower. Give me a clean close out of bar 7. If they do, then I'll short this guy. If they can't, which I imagine is a reasonable probability they won't be able to, then we'll get probably a doji or maybe a small bull body here. We'll see, of course. Somewhere around 29,000. And that wouldn't surprise me at all. But for me, best case scenario would be a big, well, let's say a moderate bear body. Closing nice and clean, obviously well below the wick low bar 6. There you go, bears. Come on now. Keep making that press. Beauty. ATR coming up now in the low 50s. Obviously, this is bar number 7 here of the day. So I gotta tell you that is what I do not want to see. I don't want to see the bulls get confident like that. I hate seeing that right now. You know why I hate seeing that? Because it's like, Jesus, come on. Don't do this to me. Don't make a big sideways range right above 29K. I can still trade it, it's fine. But you guys know I want max volatility within reason. And ideal is a trend. Though of course most days you're not going to get a trend, so you have to be able to also trade channels and ranges. But it is easier to trade trends, it just is. And most retail traders have more edge in actual trends by quite a bit than they will in ranges, even though they still can have some edge in ranges. It's typically going to be larger in a trend. All right. All right, we got 50 seconds here. Until Big Bar 7 closes up. Moves us over into Big Bar 8. By the way, guys, big deal at Apex here, still running. That ends soon, by the way. 49 bucks. All in. Intraday, no activation fee, 50K accounts over at Apex with, you said it, big man, code BIG, B-I-G. That ends here pretty soon. So, you know, obviously, if you have a relatively high confidence that you can pass the evals, the 50K evals with an intraday trailing drawdown over at Apex, then that's going to be your cheapest all-in cost that they've ever run. All right, so we've got bar 8. Let's see what bar 8 can put together here. 7, a bit wicky, but, you know, I can work with 7. I can work with 7 if 8 wants to work with me. See these bears trying to hesitate us right back to 29K. You know, I tell you guys, these round numbers, I don't know why, man. Some people get excited around these round numbers. I think they haven't been in the game long enough, because I fucking hate round numbers. I hate them. The market gets all infatuated. We stick to them like glue for weeks. Weeks! It kills volatility, creates little single bar sideways trading ranges. And you guys know I'm not a big fan of single bar sideways trading ranges. They kill opportunity for basically all traders. I know a lot of beginner traders, they think that they can kill it in single bar sideways ranges. You know what? If you're killing it, if you are killing it in a single bar sideways range, you would probably kill it even more in a trend. Maybe you just haven't seen a trend yet. But it's coming. It is coming. So dancing around 29K here, bar 8, 3 minutes out until the open of bar 9. ATR sitting at 55. It's still artificially low, but we only have, really, 2.5 pre-market bars being averaged in now to that number. So we'll see. What did I say? I think we're probably going to get into the low 60s, I think I said, mid 60s. Into the 60s at least. On the ATR, that red number, bottom right of the chart on your screen. Question, they say, I'm assuming you mean throughout the time frames, because sometimes the 5-minute chart is in a range while the 1 minute and 30-second chart is popping. Well, it's all the same data. So, sure, I'm not sure I understand the question. It's all the same data across time frames, of course, right? So, I've said, I'll say it all the time. If we're in a relatively wide range on the 5, but it's like not quite wide enough compared to the volatility, a lot of times I'll pop down to the 2. Because it's like, well, I can't quite make sense of the risk required on a 5-minute bar, but I can on a 2-minute chart. And on a 2-minute chart, you get more bar closes per directional test in a range, if that makes sense. Now, what I commonly encourage people not to do is, if we're on a 5-minute chart and it's really tight, a lot of times people will pop down to a 1-minute chart to try to make something happen out of nothing. But if the ATR, you can't create volatility. You know what I mean? So if the ATR is really tight, meaning volatility on a 5-minute is really tight and the market's not doing shit, that's not going to magically change on a 1-minute. In fact, it's just going to be more and more wicky. And a lot of times it'll turn into a forced 1,000 paper cuts kind of deal. We got bar 9, testing that wick low of bar 7, which is the current low of day. At least the low of New York session. All right, we got 245 out here on bar number 9. This is a 5-minute NQ. That's Nasdaq futures chart. And Roensch here on bar 9 is currently just above 1 ATR. You know, you've got 4, 5, 6, and then 7, 8, 9. If 9 closes clean, it's I would call that about a B, maybe B minus, to be honest with you. Kind of short setup, but B minus for me is sort of the minimum. Well, it is the minimum, and I got to put on the minimum. So I don't love it. It's not. This is not some A plus setup. But I learned a long time ago that being fearful to put on trades only holds you back because you're terrified of loss. But my man, there is no gain without the potential for loss in the market. Remember, you get paid to put on risk. I don't care if you're trading prop. I don't care the logistics of how you get paid. If you're trading prop, if you're trading personal account, whatever, whether the money's coming from a big pool of money in a prop firm or a big pool of money in the market, no one's paying you to not take on any risk, right? You're getting paid to put on risk. That is your job here. That's the value you're adding to the market. Which I don't think a lot of people really internalize that. It's like, why do you get paid as a trader? It's because you're taking risk. Your job, of course, is to make that risk not so risky, because you have a positive expected value over a larger sample size. But on the individual trade, you're obviously putting it on. So we got 57 seconds. Bears, come on now. Get us downside, baby. Man, if you guys haven't yet, hey, I appreciate you hitting the like button. I appreciate you hitting the like button on the stream, big dog. Or dislike. If it's Monday morning and you're pissed, and you're like, you know what, Nico? Fuck you. Have at it, big dog. That's okay. But I hope your Monday morning gets better. Just like I hope the Bears here can grow a pair and fucking take us downside. See if they're going to close inside the wick low of 7. Yes, they are. There's the rollover. All right, watching big bar 10. Let's see what 10 brings. So, you see these bars here. There's a lot of insecurity going on from, I'd say, 7. By the way, all this is exactly why it makes sense to wait for bar 7 on bar 6, because you get all this insecurity. Yeah, I'd still be in if I'd shorted here. I don't even know if I would have gotten a fill. I don't remember. But you know what? Hindsight doesn't matter. It really doesn't. A lot of traders do that. They'll look at, every trade they did take or could have taken on the day, and they'll look at the winners and say, man, if I could just size up there and then not take the losers, I'd be a really good play. Yeah, no shit, big dog. You'd be green as hell today. Or, at the end of the day. That's hindsight speaking. That doesn't help us. Unfortunately, we have to trade in real time. Wouldn't it be nice if we could trade after the fact? Steven, how are we? All right, watching bar 10. See what we get here. Jonathan says, what's up, brother? How you doing? I'm doing tremendous. How are you? Says green 2K on the day, calling it done. My man. My man, a 2K morning never hurt anybody. All right. 90 seconds out. Random question, do you read books? Not in particular books about trading. If so, what are your favorites? Yeah, I don't... I've never really been a big trading book reader, to be honest with you. Maybe it's just me. I think it's probably a lot of traders, but they just haven't realized it yet. I trade my best. Well, you gotta understand, RAM was developed for me. It wasn't developed for anybody else. It didn't have a name. I just needed to make this work, and that is eventually what I landed on. Now, I think reading books about trading starts to, if you read too many of them, it starts to take you in too many different directions, and then you do none of them. Fiction books, I could get into it, but it's like, I don't know. I like business books. That's my thing. If I'm gonna read or listen, I suppose, to an audiobook, it's gonna be a business book. All right, 10 is gonna close up. We'll roll over into 11. 10 is gonna be an inside close inside the wick low at 9. Okay. So I gotta tell you guys, 11 here, this is kind of the best look of the day so far. If 11 can give me a nice clean close. So we got less than 4 minutes here. We'll see how 11 closes up. ATR sitting 57. By the way, we're out of artificially low territory on the ATR now because we've had 10 bars since the New York Open. So we're into clean territory on the average range of a 5-minute bar. Beauty. Come on, 11. Hold up. I mean, hold down. Please don't hold up. Don't give me a bounce. I do not want to see another inside close. I don't want to see a repeat of bar 10. Yeah, that's what I don't want. Don't wick that back up. We got 2.5 minutes for the bears to hold this downside, not grow it too much. Create too much risk. But give me a nice, moderate bear body with a nice clean close. Not too much wick on the bottom. Then I've got a stop limit sell here for the bears. 2 minutes. See these bears? Bunch of babies, man. They can't hold us downside. Bulls trying to step in. Really, I think it's less the bulls stepping in and more the bears taking their foot off the gas. But we got over a minute to clean this up. The more the bulls pop this upside, the more wick it creates up top, which means the more risk I have to put on if I want to take this trade if they clean it up. Which, is fine unless it grows to a particularly high degree compared to the ATR, which we're not there yet. But now that we're 47 seconds out from the close, I need the bears to really step in, take this guy like 60 points downside, 65 points downside in 37 seconds, which I think we're probably going to get an inside close here on a bar 11. Which is fine, by the way. It's the slower route to a trade here for me. Because then it starts looking like we're developing kind of a single bar. Either bear channel or maybe range sideways, starting with bar like 9. All right, yep, here comes the rollover. It's going to be an inside close. We got 6 seconds. There it is. Inside close, small bull body. First bull body since bar 7. Let's see what bar 12 here brings. All right. Don't go anywhere, guys. I will be right back. I'm just topping up. It's cold, man. Don't go anywhere. 2 minutes. All right. We've got bar 12. Close it up. Looking relatively good. Into bar 13 now. Bar 13, let me tell you, is probably so far today one of, if not the most important bars. Because if this push higher fails, it almost certainly means we're headed for a sideways range around 29K-ish. But if the bulls can succeed here, give me a nice clean bull close. Ideally, like well above the wick high of 7. Then we may backfill the full day-ish as a range, which opens up opportunity for me to get long on continuation. But worst case scenario here is this move rejects and bar 13 closes up as a bear body. Don't want to see that. Ah, you fucking bulls! Bulls failing here. Bears taking us right back to 29K. Sideways trading range. Sideways trading range. We still got 2:15 on this bar, 2 minutes. See this infatuation with 29K. That's not great, man. Okay, we got 30 seconds until bar 13 here closes up. And we'll see. Probably going to be an inside close inside bar 12, the body of bar 12. We got an inside close there out of 13. On to bar 14. It's going to be easy to get chewed up in this little range here from bar 7 onward. You see that on screen, the bar labeled 7 onward. It's going to be easy to get chewed up. Some of you guys out there probably already have. That's all right. Just keep it pushing. Try not to make that mistake again. Or make it as few times as possible moving forward. By the way, if you do take a continuation trade, for example, and then you end up getting stuck in a range, look at it and say, was it the early trade? And if so, say, okay, well, it was the early trade. I knew that going into it. And if it wasn't the early trade, if you look at it and you're like, that was just a really high quality continuation trade, it just didn't work, that's okay. But if you entered on something that wasn't really a continuation trade at all, and then you got stuck in a sideways range, then you got to look at that and be honest with yourself and be like, okay, I think I got baited by the range. The range is always trying to make you believe that we're going to break out. That is effectively, think of that like the job of the range, is to make you believe that we are going to break out this time. But 80% of breakout attempts in a sideways trading range are going to fail. Okay, so I think it's about time we reassess this, huh? It's kind of early to be drawing anything. But if I had to, I'd draw that. You know, give or take on the outside, on the outskirts. So 14, if it did close up, we're kind of in the lower half, at least, of the sideways range, which makes it really tough to justify continuation. We're a minute 15 out here until 14 closes. Now, obviously, the big question here is if we end up just ranging until we make a move, or if 14 closes down here, does this turn into a bounce, fade, take out the wick low of 11, and all of a sudden, whoa, it's a soft bear channel. But I'll tell you what, man, if you start thinking that way in a range, it'll get you in trouble. Okay, you got it. If it's a trading range, a sideways trading range, bang your head against the wall, big dog, and say range, range, range. Anytime you start thinking, well, I don't know, man, it looks like it's gonna break out. All right, we got bar 15. 13 inside close. 14 inside close. 15. Still ranging around 29K. Again, a tier 1 level. Not an S tier level, but a tier 1 level, which is one notch beneath S tier. Again, S tier is going to be like 25,000, 30,000, 35,000. But I'm not a fan of these levels. Not a fan. So if we can move away, I don't care which way we go, man. Get us away from 29K ASAP. My wife and I watched Scarface this weekend for about the 20th time. Fuck. You gotta love it. You gotta love it. It's one of those movies that you can watch just about infinite amount of times and it's always good. All right, we're 3 minutes out from the close up of Big 15. Two and a half minutes. Okay, so 13, 14, 15. Again, I'm thinking range. However, there's room for continuation in a range. ATR 61. This is about 130 points wide, maybe 140 points wide at the extremes. And bar 11 has been in place for only 25 minutes. Sorry, 20 minutes. It's not a mature stop hunt by any means. It's almost so new of a level that it's hard to even really call it a stop hunt, but you know, the wick low of bar 11 is the low of day. So I'm watching the close of 15 here. And if I do get a fill and it just instantly reverses and doesn't even test the wick low of 11, then I suppose I've learned my lesson here today, and it's and it's range. I doubt I'm gonna get a fill here. It's gotta be clean. It's actually better than I anticipated. I'll give that 15 sec. Beautiful. I like that. I like that, my man. Real quick fill there out of the bears. They're on bar 16. So now let's have these bears head lower. Take out that wick low of 11. I want to see 28.9, big dog. And let's get an honest test there of low of day. Again, current low of day is the wick low of bar 11. Very quick fill on the rollover from 15 to 16. Now, you know what's interesting about this is we were drawing those levels before, right? If 16 bounces and heads up toward the wick high of 13 and then reverses, then the trading range is highly developed, which is what it's currently trying to do. Previous to that, we had really only seen one downside test, which is why it's so early. You had two tests up top, 7 and 13, 12 and 13. 7, 12, and 13, I'll call that two tests. On the downside, we really had about one until this attempt here, which is very early in the development for a trading range. Usually I'm looking for like two tests on either side, maybe 2 on one side, 3 on the other for a much more developed range. If we get that here, it's like, okay, it's a highly developed sideways range, which I'll tell you what, with an ATR of 62, you're not going to see this all that often. But you know what? It ain't over till it's over. Bears, I want to see a test of that wick low of 11, a dump down through, and let's see a bit of a wider range. I'm still cool if it wants to be a trading range, but let's at least backfill the entire width of it. If not, and I'm not betting on this, but if not, turn it into a soft bear channel. I'd be open to that too, but it's very early to say that here at this point. Big fade, bears. Let's go. Well, back to break even, a little bit in the green here on the trade. Can you explain what ATR is? Yeah, ATR is the average true range. All it is, super simple. I refer to it a lot around here. ATR stands for average true range. It's the average range in points of a 5-minute bar because we're on a 5-minute chart. If we were on a 2-minute chart, it would be the average range in points of a 2-minute bar. All right, so I'll get my limit order ready because I want to see if I can get a break through the wick low of 11. But I want to stay exposed until we can actually get down for a test, just in case we get news or something crazy. There's the rollover. which, by the way, I do have to move my stop. Ooh, shoot. Gotta multitask. Okay, stop is moved. Bring that back out. So stop goes above the wick high of 16 now, bar 16, because it closed up nice and clean and took out the wick low of 16 on the open of 17. So risk is a bit tighter now. Stay exposed here. Come on, Bears. Let's get some fucking confidence here. Come on. HR 59, damn near 60. Leave that out, stay exposed. Come on, Bears. You bunch of babies, let's go! All right, place him. Leave that for a second, see if the Bears want to take out the wick low of 11 and hit my limit take profit. They got within one tick. Are you kidding me right now? Take another run at it, Bears. Now, when that happens, I gotta do the best I can here. That is straight coincidence, by the way. There's nothing you can do about that. So, I'll be patient, give the Bears a second here. There we go. All right, let my copier get flat. I am flat, and keep it moving. Okay. So, good, but just getting started, man. What is that, fucking 2 trades on the day? Slow start. We've got bar 17 here, closing up 50 seconds out. Yeah, that was crazy. Sometimes, look, when I'm, again, was it a traditional stop hunt? Not really, because 11 was kind of an immature level, meaning it hadn't been developed very long. But when I am looking to do that, like sort of a stop hunt style trade, yeah, I try to do the best I can with an educated estimate of how far do I expect it to pop through. Volatility's higher today, HR 62, but I also know that we're kind of in a range mentality. So I look for maybe 5-6 points on the pop through the low of day. Whereas if we were in a trend, a big trend and volatility was 80, I might look for 15 points, 20 points maybe on the crack of low of day. Starts getting a little bit high, right? But more reasonable to ask for that. So I place it. It got within 1 tick. It's going to happen. Okay, there's not a damn thing you can do about that on stop hunts. But I'll also tell you what, the vast majority of the time, that's not going to happen to you. It's purely coincidental, and that's okay. And if it does happen to you, you got to do the best you can. As far as taking profit, if it doesn't actually get down for a true test, I like to leave it for a little while because most of the time it will take it. But, you know. All right, watching bar 18, by the way. Hey, man, if you haven't yet, I appreciate you. Hit like here on YouTube on the live stream. Now, I gotta tell you, it actually would surprise me here if bar 18 closes as a nice bear body. That would surprise me a little bit, just because the range action we've been seeing here today. But I would also love to see that occur. 18 closing as a nice bear body. Good. By the way, we're getting nice and away from 29K. I love it. We're 100 points away from 29K. Keep it moving. Let's keep moving downside. I want to see 400 points away from 29K. Anything but 29. By the way, 3 minutes, 12 seconds out here till the close up a big 18. I may just have another short setup here that I got to take. MP, yes sir. Yes sir, daily here for New York. 2 minutes out, by the way, on bar 18. ATR sitting at 60, that's a very healthy ATR. Hopefully that can maintain here for a little while. Good, 90 seconds. One minute out. All right, hey, in the chat, what do you guys think? What do you guys think? Are we heading into a bear trend? Are we heading into a bear trend, big dog? It's a little early. It's a little early to say that, but that would be best case scenario here for today. I would love it. Bar 18, though, I gotta tell you, is really, really important in that quest for more of a trend-like move here to the downside. All right, 25 seconds out. Come on, bears. Stop limit sell is going to go out. Move it downside. I don't want any surprises. And I will get ready here. You know what? I'm going to give it 15 seconds. See how it closes right beneath the wick low of 17? Still not that high a quality because it's a big wick, but it deserves 15 seconds. I will give it 15. Damn close to a fill. No fill. No fill. All right, bears don't want it. That's no fill, no trade. I'm waiting on bar 19. Damn close. Well, how we doing, guys? How we doing? Hope you guys are doing well, man. Midas Monday. 2 trades in. See what else we can grab here. Question. They say, Nico, I struggle with sizing. Should I be looking to take as much risk on scalp trades compared to continuation trades? So, a lot of traders, you know what they do? And I used to do this too. Typically, you end up scalping when the market is in a range, right? And you end up taking continuation trades when we're more in a soft bull or bear channel or a trend. Now, the issue is most traders have a lot more edge in trends or soft channels than they do in sideways ranges. And most traders also tend to perform a lot better on intraday swings or regular day trades compared to scalps. Now, scalping is still worth doing, okay, but the way that you make money scalping tends to be lower expected value edge per trade, larger sample size of trades. Okay, whereas intraday swings, day trades like continuation stuff tends to be a little bit less, fewer trades, more expected value per trade. Both business models work, but a lot of traders don't get this. So what they end up doing is they end up sizing up on scalps because they look at the volatility in the market and they're like, well, it's lower, we're in a range, so I need to size up to create the same amount of risk dollar-wise as I would on continuation. But the problem is there's such a thing in trading that's really important called exponential bet sizing, okay, which really means when the edge is more and more in your favor, you should be taking more and more risk. Okay, so on scalps, the edge is less in your favor. Even though they can be worth taking if you have a little bit of edge on them, you want to take a lot of them and maintain the edge on that big sample size, but you want to take typically less risk per trade because the edge is smaller. Whereas on continuation trades, think like a poker player, right? If they have a really good hand, they'll go all in if they're not bluffing. Okay, I'm not saying, shit. I know my audience here. You guys are like, man, when I see a good setup, I'm going all in, big dog. No, that's not what I'm saying. But what I am saying is the most risk that you ever take on a trade should be on your highest quality, highest expected value setup, which for a lot of you guys is going to be in a trend on a continuation trade, not on scalps. So think of it that way. Okay, continuation stuff, you're going to take less of them, more edge, expected value per trade. A lot of times it ends up being more risk. That makes sense. On scalps, a lot of times it ends up being less risk per trade, less expected value, edge per trade, more trades. Both get to the end goal, which is predictable profit. Okay, if you have that positive expected value, but it's a different business model. Okay, so I hope that makes sense. Hope that makes sense, my man. A lot of you guys think we're probably headed into a bear trend here. I hope so too. We got 26 seconds here until big 19. Closes up. So we'll see what bar 19 has in store here. There seems to be a little bit of confusion in the chat about edge. Guys, all edge is, by the way. Okay, let me ask you guys this. Just be honest. There is zero shame. What we're doing here is really fucking hard. That's why the potential rewards are so insanely high. Okay, so you're not helping yourself by protecting your ego and saying, I know what that is, when you don't really. When I say the word edge, raise your hand in the chat if you know what that means, or say, I don't, if you don't know what that means. I need to get an idea here of how many of us are on the same page. And by the way, do not feel bad about this if you don't know what it is, because who gives a shit? You just need to get to know it once, and then you're good. News says, yup. Kano, you fucking sicko. Let's promote him to a moderator. Yep, we don't, okay? No. Okay, so we got some, so guys, edge, what edge is, by the way. You know how the casino has built in, how do I explain this without using the word edge? The casino has juice built into it, right? So if you go and play a blackjack table, nobody, at least hopefully, expects that they actually have a shot at winning, right? Long term. You can win with a very small, if you go and play blackjack, one hand of blackjack, and you walk away, win or lose, you have a reasonable shot. It's basically 50-50 at winning or losing and walking out with money. The end result is potentially 50-50 walking out with money. As you play more, now listen really carefully, because this is really important. If some of you guys, you know, the last thing I want as traders, because like we are the personality type, by the way, all of us who could, you know, a lot of traders at some point in their life struggle with some kind of gambling addiction. It's okay. Well, it's not okay, but it's okay to recognize that, right? Let me maybe solve that for you so that's not a part of your life in a few words here. The longer you play blackjack, literally, the more certain it becomes. This goes for any game at the casino. And Adam, I'm going to relate this back to trading. The more certain it becomes that you lose, because as the sample size increases of spins on the slot machine or hands played, the certainty of your loss overall gets higher and higher and higher and higher and higher and higher, because the casino has built into these games what's called a statistical edge. Okay, it means that they have house odds. Okay, which is why you technically, and I hesitate to say this, but we're all adults, you technically could walk into a casino one time, spin a slot machine, hit a jackpot, walk out, never go back, and fucking kill it. Okay, but no one does that. Because people get addicted, they go back, and unfortunately, the more you play any game at all, they're not in the business of losing. Have you fucking seen Vegas? That's not cheap to build that place. Any game at all, the more you play it, the more certain it becomes that you are going to lose mathematically. That's just the way it is. Okay, because there's built-in juice. That is statistical edge. Now, as traders, you're like, Nico, so are you saying we're just bound to lose? Big dog, we're on the, as traders, we are the house. That's the business model. Okay, we are not trying to be the player here. We are attempting and being the house. That's why you have to trade some sort of logical methodology. I don't care if you trade RAM or something else, as long as you're able to, on the averages, on your average trade, maintain what's called a statistical edge. The same thing that over a big sample size the casino has. And by the way, positive expected value, statistical edge, effectively the same thing, just interchangeable. Okay, positive expected value, what that, kind of implies is that over, let's say, a big sample size, maybe 1,000, 10,000 trades, you will predictably be left with a profit. That's a positive expected value. There's expected value in every trade that you take, because you know that over a big sample size of trades, there's a return there. The same way the casino knows that if they get you to come back enough times, over a big sample size of people, there is a return there, which is why they make so much fucking money. Okay, does that make sense? That's all we're doing. Now, the interesting thing is, as traders, we don't have the edge built in to the game, right? Like the casino does. It's not just a static edge that exists. The casino, in a lot of ways, has it easier, but they have to then, their job is really to go market. The casino's job is not to maintain edge. It's already there. They built it once, the games, it's there forever. The casino's only job is to market to you. To get you, your wife, your husband, your kids, your grandparents, your aunt and uncles, all to the casino every day of your fucking life. That is their goal. Market, 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 walk in the door. That's all they need. As traders, it's a little bit different, right? We're playing the same game, the same business model, but our job is maintain statistical edge, positive expected value on the average trade that you take, and then increase that sample size to as high as possible, as many trades as possible. Here's the key, without giving the edge away, which is why I'm not taking 10,000 trades a day, because there's not really 10,000 opportunities a day. Okay, and if I did, I'd be giving away that edge. So you just learned the most valuable thing in this entire business, and you never need to learn it again. So I hope that helps. All right, we got 2 minutes. 2 minutes till the close up of bar 21. Some of you guys out there are like, you want to say, after I just said all that, you're like, you want to say that I'm full of shit, but you're like, oh man. You just learned what the business model of trading is, and you're like, fuck, that actually makes sense. That's the business model, dude. And I'll tell you what, so many people, believe me when I tell you, I've seen a lot of traders come in and out of this industry. A lot. A lot. Probably more than just about anybody on YouTube I've seen come in and out. And you know what the truth is? Almost none of them understand what I just said. That's crazy. It's embarrassing, dude. Like, if you understand and sort of internalized even just 70% what I just said, you are, believe me, I'm not tooting your horn. I don't really give a shit. Believe me, you are miles ahead of the average retail day trader. Miles. Not inches, not feet, not yards. Fucking miles. Now you just gotta brute force discipline. That's it, man. 2 weeks. 2 weeks and you're on your way. 15 seconds out. Oh, we got bar 22. We're 350 out. And we basically got, you know, there's two looks here, right? Look at this. It's still a little, I suppose, early for this look, but it certainly could be a thing. I think the more obvious look is this, although it's a tad wide. Like, in a soft bear channel, for me, I'm looking to get short on a small to moderate bull body in the upper third. That's not a small to moderate bull body. That's a large bull body. Then you also have that range potential there. It's a little bit hard to short this just because the way 2021 and now 22 have developed makes it hard to manage risk. Because the obvious place that I would want to use is the wick high of 13, but that's 75 points away. ATR is 65. It's tough. The math isn't really lining up the way that I would prefer to get short here. Now you see this. 29K. The Bulls are back at it. Not a fan of 29K, I'll tell you what. Okay, so 20, 21, 22. Little 3-bar, single bar, sideways trading range. And yeah, I said that right. 3-bar, single bar. A single bar sideways trading range is when each bar basically takes up the entire, almost, right, give or take, the entire width of the sideways range. Now, 3 bars is early to start calling it that, but you know, it's never fun when you basically get one of these little sequences where it's like 20, 21, 22. The market at this point is confused. I think the market's confused on whether we see a big sideways range or more like a soft bear channel. I think that's what the market's trying to figure out right now. And if the market's confused, why the hell would I not be, right? So let it make that decision and I'll be on the next train, man. Just hanging out right ahead of 29,000. Bulls. There you go, Bulls. Get up through 29. Starts getting a little bit weird here. So, you know, again, got a few arguments. Of course, it's possible if the Bulls crack the wick high of 13 and keep going toward high a day. It's just not necessarily the most probable thing, at least not yet. There you go, Bulls. Okay, so we're 90 seconds out here from the close of 23. And let me tell you something, as great as this looks, context right now is basically big range. So for me, I think I need to wait on bar 24 if 23 closes up as a nice clean bull body, because we're in the upper third of what very well could be a big wide 150 point wide sideways trading range, right? And you already see Bulls stepping aside. Let's see how they end up closing this guy up. Bears successfully wicking it back for a minute there. You see this? Retreating a bit, the Bulls retreating a bit, letting the Bears take control. I think that's more, I think it's less, I'll say, that wick in the last minute of bar 23. I think it's less the Bears stepping in heavier while the Bull pressure stays the same. I think it's more the Bear pressure stays the same and the Bulls step aside a little bit because they're nervous. They're nervous because they see that we might just be heading into the top end of this. Right. All right, guys. Hey, give me 2 minutes. Be right back. Don't go anywhere. All right, what's up? How we doing? We got Big 24 rolling over into Little Bar 25. See what 25 can bring. You see this hesitation, man. We got an inside close out of 24. Bulls hesitating to take us higher into the wick high of 13. For sure, there's some hesitation there. So we'll watch 25 here and see what it can give us. I'm looking for my next trade, big man. All right, we're about 30-ish, 25, 30 points out here from that wick high of 13. Now, the sideways range, it's never to the wick. Okay, it's always, the outskirt levels are always ranges in and of themselves. Okay, so the outskirt levels of a trading range are always in and of themselves little ranges. So never think of it to the exact tick, because it's not going to respect it like that. Which is why it's a little bit hard to manage risk when you're trading a sideways range, right? Just buy low, sell high mentality. It's not a logic issue when you're trading sideways ranges. That makes a lot of sense. The hard part is managing your risk because those outskirts are more ranges than anything. They're not exact levels. If they were exact levels, it'd be incredibly easy to trade ranges. Obviously, it's not incredibly easy to trade ranges because of the risk management aspect. Okay, so we got a minute 23 out here until the close up of 25. A lot of hesitation. ATR is 60. And you've got the wick high of 13. So, you know, would it be the highest quality trade ever to get short around this region? Ideally, maybe a little bit higher. And risk the wick high of 13, betting on a fade back into the trading range, back down at least toward, if not through, 29,000. It's not the worst trade ever. Is it the highest quality trade ever? Of course not. But it's something I'd be willing to do. It's not like I'm stepping in front of some big bull trend. We're not in a trend. We're in a sideways range. Of course, I would never step in front of a trend if it was actually a trend. Javaz, big man, welcome in. You're here now, brother. That's what matters. We got bar 25. Rolling over here. 2 seconds. When you see these bulls, they're hesitant. They are certainly hesitant, aren't they? You know, if I could get about a half ATR of risk here, I'd be totally fine with that. Current ATR about 56. Bulls just aren't taking it high enough. About a point or two out. Again, I'm really only interested in taking this if I can grab about a half ATR of risk using the wick high of 13 to manage that risk. Question, what are the numbers on the bottom of the candles? Please explain. It is the bar count from the New York session open. That's it. That's it. If you don't number your bars, you're tripping. Come on now, bulls. If I can get a half ATR of risk, I'm happy. ATR currently 57. Yeah. They're going without me, man. All right, there's the close up 26 into the open at 27. Ah! That's the move I was after. They got within, like, I'm not even being dramatic when I say they got within, like, 2 ticks of me punching that limit sell. I really wanted about 27 at the time points of risk if you count the wick high of 13 plus a point, which is how I set my stops. I think they actually got there for a split second, but it was faster than it showed up on screen. So give these bulls one more shot, but there you go. That's the idea. Bears pulling back on through 29,000 without me. It's okay. It's okay. There's always another trade, man. Yeah, you see this little battle around 29K. We talked about this on bar 1. There you go, bulls trying to make another little press here. Good, I will short that and use the wick high of 13. That right there is the trade that I wanted on bar 26, the early part of bar 26. So that right there, all that is a bet against the breakout. It's a bet on the trading range. You see that? Now I just gotta see if the bears can fade us back inside. There you go, bears. Do it to them, big dogs. Let's go. ATR 56. Come on, you bears. We got 25 seconds left here on Big Bar 27. So far, the Bears have had me, what, 20-something points in the money? Not quite enough. Not quite enough. ATR is 56. All right, here we go. Here's the rollover into 28. ATR now 52. Man, this little range here, it feels like it's kind of going nowhere fast. It feels volatile, but inside of its own little range. Okay, ATR currently 53. Gonna need a bit of a deeper pull in here out of the Bears. Fade this thing, Bears. There you go, ATR 53. Boom, half an ATR, let my copier get flat. Okay, good. Good little scalp. Took a little longer than I would have preferred, but that's okay. Keep it pushing. Now it makes me start to wonder here. Single bar sideways range from 25 to 28. We shall see. Green on the day, by the way. By the way, if you take a loss, a lot of traders, they really fuck this up. If you take a loss on your first trade of the day, by the way, do you think that that's not going to happen to you? Because it is. It's going to happen to you a whole bunch of days. Don't worry about it, dude. I cannot tell you how many days. I couldn't even count how many days that I've lost the first trade of the day, came back and had a fucking monster day. It's okay. It's all right. It's one trade. Keep a level head. Just keep pushing on to the next. So, bar 28, minute 18 out. Now, it makes me wonder, do we end up seeing a single bar sideways range here? Or, honestly, this is worst case scenario. Best case scenario? If we want to look at this as the full range, which is really kind of what I'm looking at, it's like, wait a second now. I could get a bearish continuation if it closed like right here. I'd be willing to take that, but it can't close too low. If we start getting down into the lower third of the sideways range on a continuation trade to the short side, it's like, not super into it anymore at that point. All right, 28 rolling over into big 29. Now, what do you guys think from here? Where are we going? Where are we going? Are we going downside from here? That would be my preferred direction. Javaz? Fucking A right, my man. Down, down. Yeah, I gotta say, looking at this as a range, I can't say I disagree. Now, again, if I agreed enough where I knew that I had edge, I would be sitting short. Of course, I have nothing on right now. I'm currently flat. But the second the next train arrives, I'll be on it. Right now, I think there's a lot of risk of a single bar sideways range here, at least for a little bit. Big Javaz is always here. Come on now. He's always here! I can't tear that motherfucker away from the charts. All that guy does is make money. What's up, Canada? How we doing? So, you know, single bar sideways range, we hang out. Everyone else hits this and blows all their accounts. We chill. We chill and wait for the real opportunity to hit. Again, you got bar really, 24 through the current bar 29. We got 248 out. Trading bars, yes sir. Yes sir. Market open, baby. This is a dangerous little piece of price action here, by the way. A lot of people, even intermediate traders, and I don't really think this is an opinion. Sometimes what I might say might be an opinion, but I try not to really have an opinion on the market. I think opinions have always gotten me in trouble. Same with most traders. I just read price action and I say, okay, what's the more probabilistic outcome? And does the equation fit? Reward to risk and probability, my estimated probability on the setup. But bar 24, 25, 26 onward until right now, a lot of traders look at this and they think, it's safe. This is safe now. I should just trade the range. Obviously, when I took that scalp, it was a bit less of a single bar sideways range. Now it's relatively clear. That's what we're looking at, unless this breakout succeeds, which we'll see. But a lot of traders, they hit this, especially you newer guys, which, by the way, there's nothing. I was a newer guy at one point too. Like, everyone has to come into this with basically nothing. We're not born knowing how to trade. I didn't even understand what a futures contract was for like a while. Interestingly, futures are like the most simple instrument in the world, but I think they seem intimidating to a beginner. Anyway, a single bar sideways range, it chews a bunch of people up because it looks safe. It's deceiving. It invites you in. It says, hey, the water's warm, it's safe. Buy low, sell high. Sell high, buy back lower. It's logical, right? It makes sense. Stop loss? I don't know, just put it somewhere, right? That's what it tells you. The fucking problem is, how do you manage your risk? It's really tough to do unless you're using like what I use, the Wikaya 13. Which now that it's so tight, the probability of this trade is very, very low. I'm no longer into it. Question, what is the max number of Apex accounts that one can buy? 5 or 20? So you can have 20 up to 20 and everywhere from 1 to 20 or 0 to 20, I guess. Funded accounts at one time at Apex, but you can actually buy. I don't really think there's a limit. Don't take my word for it, but I haven't seen ever a limit on how many evals you can buy at one time at Apex. But you can only have 20 fundeds activated at any given time. But I have certainly had more than 20, well over, I should say 20 evals all at one time at Apex. No one's ever hit me up and been like, hey, you can't do that. I think they're totally cool with it. Actually, I read their rules a while back. It did say they were cool with it. I assume it still says that. Again, don't take my word for it, but I've done it with no issues. But do not try to skirt around having 20 fundeds. I've known, not personally, but I've heard through the grapevine and from Apex that there's some people who have tried to skirt around the 20 funded limit, and as soon as they get caught, they get banned. Basically forever. It's not worth it. You can make tons of money with 10, 15, 20 fundeds at Apex. You don't need to skirt the system. You can make way more money being able to trade with Apex, staying in their good graces for a long time, rather than being like, I'm going to go from 20 to 40 like a fucking dummy and then getting banned in 2 weeks. It's just not worth it. So you see how that took out the Wikaya 13? Yeah, that's what I mean when I say the probability when we get so tight is very low. That 13's gonna hold up. All right, hey, be right back. 1 sec. All right. What's up? We got Big Bar 30 closing up here, 40 seconds out. We'll see if 30 can get anything done. I'm curious to see if 30 wants to pop, close up as a nice, clean bull body. If not, we may just hold this up as a trading range. All right. Likely an inside close. By the way, guys, hey, code BIG, B-I-G, Apex. $49 all in, no activation fee for the no activation fee 50K intraday trailing drawdown accounts. That is the lowest all-in cost they've ever run for that style of account. Take Profit Trader, if you need daily payouts, you're trying to go full time, go hit it. You need money coming in, daily payouts, it's the way to go, man. Take Profit Trader, same code BIG, 40% off, and no activation fee over there. I will see you guys in the next one tomorrow, market open. Man, new timing, I'll see you guys then. All right, guys, have a great rest of your day. Please stay patient. If we see trading ranges, don't force anything. You know, that's where everyone blows up. Don't do it. Don't be one of them. Wait for the opportunity to hit, then fucking hit it. All right, guys. See you soon.